What's up, everybody? Welcome back to the channel. I'm Shawn, GILL CPA with Neutron Tax. In today's video, we're going to address what I do at the end of every year to make sure I lower my taxes as much as possible. Before we get into that though, make sure you leave me a comment, like, subscribe, all that stuff. Tell all your friends. Make sure my channel blows up, or at least does well. I always appreciate the help. But now let's get into the video. So the first thing I do is make sure that my W-2 tax withholdings are correct. This is the easiest one to do and the easiest thing to overlook. I see this every year with clients where they got a pay jump, a bonus, whatever it may be, and the next year when it's tax time and they look at their W-2, they get it in the mail or, get it emailed to them, their withholdings were much lower than they should have been. Meaning that for every paycheck that they had throughout the year, their job didn't withhold the correct amount. So they got too much money, and now they're going to owe a big amount of taxes out of pocket, and they already spent the money because they thought it was being withheld from their paychecks. The best way to check this is to pull a year-to-date report from your employer's HR website. So if that's Gusto, if that's ADP, Paychecks, whatever it is, you can log into your company's portal and have that information at your fingertips and check that. Sometimes, even if you haven't had a pay increase or anything, substantial happen, I've seen for a lot of clients, just their HR department, for some reason, their software just makes a change in the next calendar year to withhold less or withhold more. So that's the first thing I always check. The second thing while I'm doing that is I make sure that my IRA contributions or 401k contributions are being maxed to whatever level I want. They're being taken advantage of. Make sure your HR department is doing that for you. Or if you work for yourself, make sure your payroll software is doing that for you if you are a entity such as an S Corp that requires you to be on W-2 payroll. So you want to make sure that your 401k is as much as you can possibly get out of it. Each year, of course, contribution limits to all of these different retirement accounts change for inflation. It's a part of the tax code. So you want to make sure your 401k is good, your traditional IRA, your Roth, whatever you're using, or your SEP IRA if you're self-employed. You want to make sure you are making a contribution that's accurate to the newest contribution limits. Second, or the third thing I do is that same process, but with a health savings account. So if you're a single person, make sure your HSA contributions are maxed to the 2023, it was about $3,650. For 2024, it's going to be north of $4,100. And if you have a family plan for your HSA, make sure that's up to the limits. In 2023, that was in the high 7,000s. And in 2024, that's going to be around 8,300. The fourth thing I do is I make sure that my stock sales and losses have been netted properly at the end of the year. Meaning that if I have some stock that I sold and I know I'm going to have a capital gain or some sort of taxable gain, and then I also have some, let's say, losers, a stock that I've been holding on to for a while that the value's dipped, I don't think it's going to ever really bounce back, and I need to just kind of get that capital. I will sell that loss to then offset the gain that I had that year to minimize any taxes that I would pay on the money that I did make. So instead of just making a bunch of gain and keeping the losers, I'll make sure I sell the losers to net those things out. Same with just selling losers with no gain. I'll hold on to those losers to see if they can be used the next year to offset potential gain I may have in that year. Number 5, if you're a business owner, make sure you sit down with your CPA to review your entity status and make sure that you're in the correct and most tax efficient entity structure for your business. Meaning, let's say you've made a lot of money, it might be time for you to transition to an S Corp for the year and make a retroactive election for the S Corp to lower your self-employment taxes. Or maybe you've been a S Corp and it's just not beneficial for you and you really need to switch over to a C Corp. Talk to your accountant and see if that makes sense for you and get started on that process. Number 6 is make sure, again, if you're self-employed, that you make your estimated quarterly tax payments. If you've missed a couple quarters, it's still better to get those payments in before the year is over than it is to wait until the tax deadline in the coming months to make that payment and get an underpayment penalty. Okay, you want to make sure you're paying in so that you don't get any penalties that are unnecessary and you just pay out of pocket for no reason when you could have avoided those penalties by just making the payments a couple months sooner, closer to the deadlines, right? Number 7, last but not least, is if you have rental property, make sure you are paying into any deferred maintenance that you may have. So let's say you look over your financials year to date for the year and you see that you're going to have some, net of depreciation, you're going to still have some taxable income on your rental properties, but you might need to work on the roof next year. You can make payments into that this year and write that off. So let's say it's November, you're seeing that, hey, most likely by the end of the year, I'm going to have $5,000 of taxable income net of depreciation from this rental property, and I'm going to need to hire someone to paint the outside or work on the roof or do the landscaping, redesign or something like that, or even property taxes. You can find those vendors now, sign those contracts, and maybe you put down a 50% deposit, and because you're most likely a cash basis taxpayer, you can write that off. Now, same with property taxes. Let's say you don't have any of that deferred maintenance to do, and you're gonna have to pay your second half of your property taxes in the coming months. You can make that payment early just to get it on the books and write it off. I know here in Arizona, our property taxes, we typically get them March and October. So after you make your October payment, if you're in a position to have income, you can make that March payment early and write that off. So just making sure you mitigate any taxable income there by catching up to deferred maintenance can be a game changer and save you unnecessary tax bills. And also, this is not number 8, but just in that same vein, if you were to sell a property, look into possibly doing a 1031, so you defer gain instead of selling something by the end of the year and then having a recognizable gain. So in conclusion, those are the 7 things I do at the end of every year to make sure I don't leave any money on the table with the IRS and that I minimize my taxes. If you need someone to talk you through this process or help you with this and plan with you, you can schedule a call with me at the link in the description below. We can talk one-on-one. I can give you a quote for our services and help you through the process and make sure that we do your tax planning so that you don't leave any money on the table for the IRS. As always, I appreciate you watching this video. Please be sure to give it a thumbs up, leave a comment, like it, subscribe, all that good stuff. Share it with your friends, and I will catch you in the next video. Again, I'm Shawn, GILL CPA with Neutron Tax. Thank you for watching. So that was the end of this video. If you liked it, please give it a thumbs up, subscribe, leave a comment. It helps me grow the channel. If you need help with your taxes, you can book a call with me directly at the link below in the description, and you can also sign up for our email list. We only send out an email about once a month, and that's everything I need to tell you. So I will see you guys in the next video. I'm out. Peace. Have a good day. Appreciate the views.